Welcome back. Now let's unpack some of the market movement for you. We'll get into the rest of this week and how it's actually performed, and we'll perhaps start on a global front. It's become the biggest news story for quite some time, but it recently has, of course, just boiled over. Theresa May and that Brexit deal, of course, one that is of keen interest, and we'll unpack the week, as I said, so we'll take a look at things that have really happened this week. We'll start off with a quote from this week, and it was quite pertinent, of course, to start off with none other than Theresa May, who is the British Prime Minister, saying that leadership is about taking the right decisions and not the easy ones, she told reporters. She did say as well that as Prime Minister, my job is to bring back a deal that delivers on the vote of the British people, and I believe this is a deal which does deliver that, which is in the national interest, and I am going to see this through, yes. So no matter what, she seems to be steaming right ahead with this Brexit deal and will forge away with the draft deal, and says that no matter what happens now, even if you get the resignations of at least 7 ministers in her cabinet at this point, she's still going to will her way forward. Let's remember that she isn't necessarily the yes candidate, but her job is to make sure that this does happen. So many other permutations could happen with Brexit, and of course the Eurozone will want to send a stern message out to all the others to say that they shouldn't necessarily want to part from the Eurozone. One other key message and one other key element that has come out this week is the price of oil. That's going down to around $70 a barrel and less, around $65 a barrel at some stage as well. And that is the key number for this week, as I thought we'd put out, less than $70 a barrel. What does this mean? South Africa, of course, could see that petrol price go to around, drop by around R1.54 for both 95 and 93 octane. So that will certainly help with the rand stabilizing at around R14.20 against the US dollar. This is going to be a good mark for South Africa. Diesel expected to go down by at least 92 cents a litre, while at the same time illuminating paraffin could go down 85 cents a litre. So this mark is going to be quite critical. But how did it get here? How did it get to below $70 a barrel? One will certainly ask. Is because one, Donald Trump said we should get the price lower, and even though Saudi Arabia said they're expecting to go a little higher with that price, it didn't follow them, and instead it followed Donald Trump. Let's get into some local news now. This is the price of Naspers. So I thought we'd probably put this up for this week, and it has certainly recovered this week. It had fallen as much as 6.2% this week, having seen it go to that mark up until Wednesday midday. At Wednesday midday then, we saw the results of Tencent. Of course, Naspers has a more than 30% holding in Tencent, which then saw that stock price come up over 11% up until around 10 o'clock or so this morning. Why this is so significant is because the earnings of Tencent came out and had beaten expectations and looked a whole lot better. So you see Tencent and Naspers then recovering beyond the mark where it started this week, just above 2,700 Rand per share there. So overall on the week, it's gone up around 4.2%. Certainly an interesting graph to look at, considering that the tech stocks have tumbled this week in particular, and it hasn't just been a recent element, it's kind of been something that has happened throughout the last few months or so. Considering tech stocks and the mobile companies, we got earnings out of Vodacom very early this week, but the one that I thought was of key significance was Telkom. The CEO, Sipho Maseko, really detailing just how he felt things could go ahead and where they're keen to focus on as a company. And of course, our reporter Mbalenhle Ntetwa got to speak to the CEO a little bit earlier this week, and this is what he had to say about the company.
Largely are a data-focused network. And I think one of the indicators that you get out of that is that there is a transition in the market away from voice to data. And I think that one of the things we've been able to do is to evolve product propositions and pricing that the market actually is looking for. So we've made a big bet on data and the fact that data will lead growth, not just on the mobile side, but even on the fixed side. We've invested a lot in fiber, we've been modernizing our network, we're investing in LTE, so 4G and 4.5G. We are actually ready now even for 5G going forward. So I think those are the elements that have contributed in making sure that the network experience of our customers continues to improve.
Well, that was your week on point. Let's get into the market picture now. An Asian market swung throughout Friday as investors weighed China and US trade speculation. This while the pound struggled to stage a strong recovery from the previous day's Brexit-fueled bruising. As a volatile week drew to a close, of course, coming to today, some stability emerged in the oil sector with earlier sharp losses tailing off, providing relief to regional energy firms. Now, hopes that the world's top two economies are making efforts to resolve their painful tariff standoff provided some support to global markets, though conflicting reports were keeping a sense of optimism in check. And after shifting in and out of red all day, Tokyo's Nikkei dipped 0.6% to 21,680 points. The Hang Seng edged up 0.3%, 26,183, while the Shanghai Composite ticked up 0.4% to 2,679. Over into the United States now, and the U.S. stocks rose last night after a news report that further U.S. tariffs on Chinese imports would indeed be paused. That spurred optimism and that the two countries could indeed resolve their trade dispute. A spokesperson for the U.S. Trade Representative did, however, deny the report, so the U.S. market snapped what was a four-day losing streak as the Dow Jones Industrial went 0.8% higher, rising to 25,289 points. The S&P 500 gaining just over 1% to 2,730, and the Nasdaq Composite added 1.72% to 7,259 points. As we've spoken about for most of today, the draft Brexit deal by Theresa May, the British Prime Minister, is going to be of keen focus for a lot of the markets, and how that fares will certainly impact the currency. South Africa's rand against the pound, of course, will be of keen interest, but also it will be of keen interest to check in on the European markets, and we'll do that right now. Key marks there, as you can see, with the rand around 14 rand 21 against the US dollar, $67 for a barrel of Brent crude. Those are the marks we will talk about. That is the energy in the sector we will unpack for now, especially with Warwick Lucas joining me now from Galileo Capital as we perhaps unpack the markets a little bit more. Warwick, thank you so much for joining us. It's been a turbulent time taking a look at what's happened in Brexit land, shall we call it, and Britain really struggling with coming together with that deal, but it seems Theresa May is sticking to her guns no matter what.
Right, so Brexit's clearly a very emotive concept. On the right-hand side, we have got Brexit as soon as possible, at whatever cost, within the Conservative parties. They like the horse smelling the stable. Their head is down, and frankly now they don't care how hard they charge to get to that gate.
Is it going to be a case of desperation, though? Do you think that, I mean, is it going to be a deal that is worthwhile for them and that they may regret at a later stage?
They may or may not. I mean, this is a grouping that has, frankly, regretted becoming part of the EC for possibly 50 years. So it's not as if they're going to change their views in any kind of a hurry. But on the left-hand side, in the UK, we have a Labour Party that, frankly, on its own would normally be quite unelectable. So we now have the situation that you have a grouping called Labour with a gun shooting at the bottom of the boat. Gosh, that sounds like some movie out of a South African cinema. So the reality is, on both sides, you simply do not have enough heads to add up to 50% that are cool heads, and that is the difficulty that Theresa May finds herself in. The interim deal that she's got is probably as reasonable as could be extracted out of the EU as possible, but frankly it's going to satisfy nobody, and as far as I see it, I think we're still looking at a hard Brexit.
Tainted legacy for her, though, isn't it?
Well, unfortunate, but you know what, sometimes people who do the right thing also go down with the ship, and I think that is her assigned lot.
Yeah. What happens then on a South African context when it comes to Brexit? How much more surety, where does the deal need to necessarily be for us to get a clearer context of where our currency will sit, where trade decisions will sit? That's going to be something that will need to be discussed for quite some time as well, won't it?
Yeah, absolutely. Look, there's going to be a lot of dislocation associated with Brexit, and I mean, the first take that just about anyone has is a wailing of and gnashing of teeth, and I think we've got to step back and look at a broader context here. Now, that broader context was that when Britain first joined the EEC in the late 50s, early 60s, it took a long time to join in. De Gaulle, the French president at the time, effectively forced Britain to cut a lot of ties with its Commonwealth in order to finally join.
Yeah.
And there was a great deal of eggs broken when the UK made that omelette. So the counterpoint is, well, there is potential opportunity, sure, in the short term, because our link into the EU was substantially via Britain.
Yeah.
South Africa will suffer. But what it needs to do to ameliorate that is then more directly find ways to plug into the EU, and at the same time focus on building a bigger and better trade framework with the UK. It's an opportunity.
We've had a lot of investment conversation this year, right? President Cyril Ramaphosa has made an urgent push in that investment direction.
Yeah.
But it does feel, however, that we haven't necessarily made a big push to that EU segment, knowing that in some way or other there may indeed be this split by Britain and from the Eurozone. Is it because we're waiting for more clarity, do you think? Or is it just because we're sort of just hanging back and just hoping for the best on this one?
I think a mix of things, and I think frankly it's also that we've turned inward and we've had to get our own house in order to some degree. I think the reality is, though, that the EU was certainly still willing to make deals with South Africa, and I think having perhaps gotten a little bit complacent, it's not as if we can't make up for lost ground. We certainly can, and I think South Africa needs to heavily engage with the EU to secure its interest there in the future.
Yeah, Theresa May's deal will certainly be one to look out for, not just for the currency sake, but I think for trade's sake as well, and global stability as well. Let's turn our attention back to South Africa's markets now. A lot sort of happened this week. We had a lot of red throughout the week. Yesterday finally closing on the up ever so slightly. A lot of results having come out, the likes of Vodacom, the likes of Telkom as well. What perhaps stood out for you?
All right, so looking at all these results coming through, they strike me as what analysts often call a process of kitchen sinking. Yes, we know that the economy has been absolutely rotten.
Yeah.
A lot of companies expect bad results anyway, and so companies are taking a chance to clear the decks, as it were.
Yeah.
So it's a bit of a cloudy picture, quite frankly.
But the sad thing, however, is that even if certain companies perhaps come out with earnings and perhaps come out at exactly the same amount. For example, I think it was Netcare, or Mediclinic rather, who came out with their trading statement as well. And things they guided for a particular end, and it came out at exactly that. And however, the market was just like, wow, considering that things actually are as bad as you say they are, we're going to drop you, and they nearly fell 5% in the day. As you say, it is a sense of kitchen sinking, but is that the way the market is just headed because there's a general sense of negativity around?
I think one of the themes that we are seeing is that in some quarters anyway, that companies, particularly healthcare companies, that made offshore diversifications because they felt politically they were embattled at home, and therefore they made deals on bad terms, those chickens are coming home to roost. And I do hope there's a lesson there for both business and for government, that businesses that feel forced make bad deals, and in turn businesses need to be aware of making these rotten deals.
Yeah. What about then if you go into the rand, rand dollar exchange rate? That sort of, I keep saying that we went at some point to around 1380 and even beyond on some good news, and then we came all the way back. We've sort of stabilized at around 1420 odd, between 1420 and 1430. Is this the level we're at for the end of the year, or does this hinge a lot on what else is said from Donald Trump and the United States, and perhaps local factors which may indeed still come out?
I think we mark time basically until a US-China trade deal comes through. I mean, we're a commodity exporter. China is a massively important trade partner for us, and until we see a trade deal that allows China to pick up and re-inject some certainty into their economy, I think we basically mark time.
Yeah. Very finally then, oil price below $70 a barrel, that's got to be a good sense for South Africa, of course not for the oil exporting nations.
Great for consumers. And obviously you hope that that's an oil market specific thing and then not a sign of globalized weakness. If it is, well then that's again a setback for SA, because that's the last thing we need right now.
Warwick Lucas, appreciate your time from Galileo Capital there, helping us unpack this market picture. A whole lot more as a lot comes through on the 4. As I said a little bit earlier, R1.54 is the expectation of a drop in the petrol price for December. Whether that comes to the 4, we will unpack that as soon as it comes through. That's where the buck stops this afternoon as we take a look at the markets. Nzinga joins you right after this. Do stay tuned.